2x to 3x, or if it can get back to just where it was a month ago, it's a 10x. All right, welcome to Talking Investing. I am Tom, and this is not financial advice. We are here to talk about all things investing, and today I want to talk to you about a company called MicroVision, stock ticker MVIS. Special disclaimer, today this is a highly speculative play that I'm talking about. This is not the normal thing that we go through on this channel, but I saw a short-term opportunity here, and I wanted to get it out to everybody. Be careful, take it for what it's worth, but let's dive into MicroVision, and I will show you what I'm looking at. So for starters, this is MicroVision's homepage. MicroVision is a company that specializes in LiDAR technology, which is short for light detection and ranging. LiDAR is used among many things, but MicroVision's application is for vehicles to make them safer and ultimately, potentially one day, autonomous. They have very low sales at this point, so they are a startup company. They have plenty of cash, but this is not going to be a due diligence video for a long-term investment. I see a couple of things happening that I think are creating a short-term window for a swing trade. So I want to just show you what I'm looking at. If you look here, the average volume of stock traded on a daily basis for this company is, according to Yahoo, 26,281,438. So 26 million shares traded per day has been their average. Now, I'm going to take you into the daily trading volume, and let's take a look at what's been happening recently. So you can see, we're in the middle of the day today. Today is July 15th, so we're at about 2 million shares right now. So I'm not going to count today. But if you just go backwards from here, for the last month, 5 million, 3.4 million, 4 million, 4 million, 5.4, 5.2. The biggest number on this page is 25,551,000. That's back on June 25th. And if we look, that's still below their average. Here is their stock chart for the last 8 or 10 months. This company really just kicked into gear December 22nd. They had a big $158 million volume trading day, and that was a big spike up. So that was kind of the beginning of their run. Now, I will tell you, this is also what everybody's calling a meme stock. So that's part of what's affecting the trading in the short term on this. So part of the reason it's switching from high volume to low volume is, as the meme community rotates in and out of things, the volumes can fluctuate radically. Let's take a look, because I think that's creating a big opportunity, and I think it's setting up right now. These are one-day candles, so that's daily volume. Here, massive volume. The volume pops up to, I'm going to just go day by day, 117 million, 213 million. And remember, it's trading like 5 million a day right now. You're in over 200 million on this day, and 158 million and 179 million. Now, these days we're leading up to their quarterly results. But once again, we went from a period of low volume to this time a gigantic volume spike. That put them at another new all-time high. Intraday, they touched $28.00, and that is their all-time high. Huge volume spike, huge spike in the price of the stock. Now, they released earnings. They were a bit of a disappointment. This is still an early stage company, so this is not a fundamentals analysis on this stock. I probably will do a video in the future going through their fundamentals. That's a totally different conversation. That is more typical to the videos that we do here on this channel, which are going through the fundamentals, looking at companies that have strong fundamentals, a good story, and are a good long-term investment. So we're more mid-term to long-term investors. I personally do swing trades. I don't do day trades. And so, I see opportunities, and this one just looks like it's setting up so nicely that I wanted to share it with everybody. So having said that, if we look at the volume, it goes back down, way down from, 150 to 200 million. Back down to, 10 million, 11 million, 8 million, 5 million. Once again, we have a spike right here up to 50 million shares. A giant green candle again. So here we have a spike in activity for these few days, and it goes from so that takes it from a low on May 13th of $12.22 to a high June 10th of $24.69. That's less than a month. That's a double. That's a double in less than 1 month. And again, it coincides with these volume spikes. And these volume spikes are always preceded by these areas of low volume activity. So it's a low volume moving into a spike, and that spike is a giant green candle. Low volume moving into a spike, a giant green candle again. Now, so we're a month later now. Low volumes, and the volumes just keep getting lower. We're 1 month later, and we're at historically low volumes. So I think this is set up for another pop. And it's all the way back down to, as I'm talking right now, it looks like it's $13.59. Now remember, it hit 24 or 25 over here. It hit 28 over here. So from 13, there's a potential short-term double the way this has been trading. This is not financial advice. I don't have a crystal ball. I'm just looking at a short window of time here where this stock has been acting fairly predictably. Again, this is a high-risk trade, and what we're going to look at next is options, which are even higher risk. Having said that, sometimes on trades like this, I like to use options because I can put less money at risk. So the upside-downside risk-reward equation works for me better versus trying to buy the stock itself and hold it, because again, I'm not looking at the fundamentals on this one. I'm looking at what looks to be a trend and a short-term trading option, because these volumes are at epic lows compared to what they've been doing recently. Again, we just did 5 million yesterday. They've done over 200 million in a day, within the last few months. So I want to show you the options that I'm looking at. Okay, so this is what I'm doing. And again, just don't duplicate what I'm doing. Do your own due diligence and find, if you're looking to trade this, find an option that you're comfortable with, or you can pass on this one because it is high risk. But I'm going to show you the ones I'm looking at. This is the August 20th, 2021 option at $20. And I'm going to show you why I'm looking at this. If you go to August, so here's the August 20th, 2021 options. If you go down here, you'll see there's some unusually high trading volume at the $20 mark. 540 options traded today at the $20 mark, which is way out of the money. But again, if you look at that chart, it seems to be fluctuating between $13 and $26 or $28. So, 20 is right in the middle of that. So big, unusual option volume here at $20. And then again here at $25 is 355. So those two strike points have by far the most volume at the August 20th date out of any strike point. So all these in the money or near the money, people are just jumping right over those. I think they're seeing what I'm seeing, and they're saying, "Hey, let's go at 20 or 25 because it looks like it's time for this thing, to everybody to rotate maybe back into this again." Right now, this option is trading at 70 cents. If you look at the 6-month historical chart of this option, a little over 1 month ago, this was at $7. This option, that's a 10x. So 70 cents to $7 is a 10x. Now, if you were going the other way, you lost a lot of money on this option. But you'll see, this option has been up and down. So if you go to February 16th, this was almost a $12 option. It got down to, under $4. Then on April 26th, it got back up to $11.70. Then it got down to $2.40. Back up to $7, and now it's at 70 cents. So the question is, the clock's ticking on this. There's just a little bit over 1 month left on this. Does it have one more spike in it? If it does, it's a potential anywhere from 2x to 3x, or if it can get back to just where it was a month ago, it's a 10x. So this is what I'm looking at. Massive upside potential. They're very inexpensive options. So if you were to buy one option, They're in lots, options trade in lots of 100. So that would be $70. So you could mitigate your risk to $70 and have the upside of turning your 70 to 700. So again, this is not financial advice. I don't know that that's going to happen. Based on actual previous results, this has the potential for that to happen. It's already done this once, twice, 3 times. So is it going to do it one more time? I don't know. If this time frame is too short, I have one other option that I'm looking at, and that is the January 2022 option. Now, this is going to cost you more. So for one lot of this, these are $2.90, so that would be $290. So, but it's trading, again, a month ago, this was at $8. Let's see, $8.68. So that's nearly a triple. So we've bought ourselves 6 months time, so we get more time on this option, but the reward goes down from a potential 10x to maybe a potential 3x, which is still phenomenal. These are the two that I'm looking at. Please do your own due diligence. You don't have to pick the exact ones that I pick. I'm just showing you these as examples to show you how I look at options and what their potential upside is, and to show that, you know, for $70 or $290 at risk, you can take a little risk versus having to put thousands or tens of thousands of dollars into buying and holding this stock. This is more of a short-term swing trade. So that's what I'm seeing in this stock. Do me a favor, leave me in the comments if you like this kind of video where I'm going through a little higher risk but higher reward play that's more of a swing trade versus my normal videos, which are more long-term investment buy and hold videos. Smash the like button, subscribe to the channel if you haven't already, and thank you for watching, and I will see you in the next video.